Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and congratulations on finding the only weekly stock list you're ever going to need as a dividend investor. Over the past 2 weeks, I've given you 10 fantastic dividend stock ideas, and I'm happy to say this, but this week's list might be the best one I've ever seen.
Say what?
Remember, if you determine that any of these stocks are right for you and you're here on time, you'll be able to buy those stocks and get the next dividend really soon, as all the stocks mentioned in today's video will have an ex-dividend date for this coming week.
What?
Now I know all that sounds way too good to be true, but I have something else even better to tell you. All the information in today's video will be provided to you guys at the low cost of free $99, and all I ask for in return is to make sure you're subscribed to the channel, you leave a like on this video, and you guys talk to me down in the comments below and let me know what you guys thought of this week's list. All that seems simple enough, so let's go ahead and kick this week's list off with number 5, MSCI, stock ticker MSCI. MSCI is a quarterly payer in the financial sector, paying $6.40 per share per year with a forward dividend yield of 1.19%. MSCI has been paying and growing their dividend over the past 10 years. They have a 3-year dividend growth rate of 24.08%, a 5-year dividend growth rate of 20.77%, and a payout ratio of 38.2%. At the time of recording, MSCI was trading 12.56% off of their 52-week high. They have an ex-dividend date of August 16th with a payout date of August 30th. And looking here at this chart, you're going to be able to see the growth of $10,000 both with and without dividends being reinvested. Up here at the top, while reinvesting your dividends, MSCI would have brought back $134,909.99. The S&P would have turned $10,000 into $32,861.12. That's a difference of $102,048.87 on the side of MSCI. Down at the bottom, without reinvesting your dividends, MSCI would have still turned into $127,405.95 versus the S&P turning into $30,272.78. That's a difference of $97,133.17, and the difference between reinvesting and not reinvesting those dividends was $7,504.04. Next up, coming in at number 4 is KLA, stock ticker KLAC. KLAC is a quarterly payer in the technology sector, paying $5.80 per share per year with a forward dividend yield of 0.83%. KLAC has been paying and growing this dividend over the past 15 years. They have a 3-year dividend growth rate of 16.22%, a 5-year dividend growth rate of 13.5%, and a payout ratio of 19.39%. At the time of recording, KLA was trading 22.33% off of their 52-week high. They have an ex-dividend date of August 15th with a payout date of September 3rd. And up here at the top, we have that $10,000 investment that would have turned into $148,266.87, outperforming the S&P 500 by $115,405.75. Down at the bottom, without reinvesting those dividends, KLAC would have still turned into $103,432.08, outperforming the S&P 500 by $73,159.30, but the difference between reinvesting and not reinvesting those dividends was a massive $44,834.79. Next up, coming in at number 3 is Eli Lilly, stock ticker LLY. Eli Lilly is a quarterly payer in the healthcare sector, paying $5.20 per share per year with a forward dividend yield of 0.65%. Eli Lilly has been paying and growing their dividend over the past 11 years. They have a 3-year dividend growth rate of 15.19%, a 5-year dividend growth rate of 15.02%, and a payout ratio of 27.06%. At the time of recording, Eli Lilly was trading 16.73% off of its 52-week high. It has an ex-dividend date of August 15th with the payout date of September 10th. And up at the top, $10,000 into Eli Lilly 10 years ago would have turned into $159,869.40, outperforming the S&P 500 by $127,008.28. Down at the bottom, without reinvesting those dividends, Eli Lilly would have still turned into $135,326.72, which outperformed the S&P by $105,053.94. And the difference between reinvesting and not reinvesting those dividends was $24,542.68. With us being halfway through this video, you know if you like it or not. If you do, make sure you leave a like on the video as it helps me continue to grow my channel. Make sure you guys comment down below if you guys own any of these stocks and how they're doing for you. And if you don't own any of them, did any of these stocks pique your interest? But now let's get to number 2. Coming in at number 2 on this week's list is Wingstop, stock ticker WING. Wingstop is a quarterly payer in the consumer discretionary sector, paying $1.08 per share per year with a forward dividend yield of 0.3%. Wingstop has been paying and growing their dividend over the past 7 years. They have a 3-year dividend growth rate of 16.27%, a 5-year dividend growth rate of 19.58%, and a payout ratio of 23.49%. At the time of recording, Wingstop was trading 15.85% off of its 52-week high. It has an ex-dividend date of August 16th with a payout date of September 6th, and that $10,000 investment into Wingstop just 9.15 years ago, so a little bit less than the other ones, still would have turned into $165,234.06 versus the S&P 500 turning into $29,902.13. Wingstop outperformed the S&P by $135,331.93. Down at the bottom, without reinvesting your dividends, Wingstop would have still brought back $125,803.17 compared to the $27,810.51 from the S&P 500. That's a difference of $97,992.66, and the difference between reinvesting and not reinvesting those dividends is kind of large at $39,430.89. Coming in at number 1 is one I've talked about many times here on the channel, and I think some of my subscribers actually are lucky enough to own this one. Say hello to Comfort Systems USA, stock ticker FIX. FIX is a quarterly payer in the industrial sector, paying $1.20 per share per year with a forward dividend yield of 0.39%. FIX has been paying and growing their dividend over the past 12 years. They have a 3-year dividend growth rate of 32.07%, a 5-year dividend growth rate of 22.61%, and a super sustainable payout ratio at just 7.61%. At the time of recording, Comfort Systems USA was trading 13.13% off of their 52-week high. They have an ex-dividend date of August 12th with a payout date of August 23rd. And here's where this one takes all the cakes. A $10,000 investment back to 10 years ago, FIX would have turned into $229,402.77, outperforming the S&P 500 by $196,541.65. Down at the bottom, if you wanted to keep the dividends for yourself, FIX would have still turned into $215,218.30, outperforming the S&P by $184,945.52, and the difference between reinvesting and not reinvesting those dividends was $14,184.47. With that being said, if you made it here to the end of the video, but you're seeing this on or after August 12th of 2024, you need to make sure you have that subscribe button clicked along with the bell being rung, as some of the ex-dividend dates I mentioned in today's video might have already passed, which means you just missed the next dividend.
Come on now, dog. Come on, man.
While that's not the end of the world, waiting 3 months for your next dividend really sucks, so make sure you guys tune into the channel every Friday at 8 a.m. Central Standard Time so you don't miss your next opportunity. Don't forget to use that comment section down below to let me know if you guys own any of these stocks and how they're doing for you, and if you don't own any of them, did any of them pique your interest? And if you like the style of this video and you want to see the 5 high-quality dividend stocks I mentioned last week, check out this video right here. But until next time, see ya.